Hello again, fellow BeachBum traders. Thank you for joining us for our weekly trading game plan for the week of August 15th through August 19th. And last week we saw that inflation is cooling down, but is still very hot. So we'll talk about how did the market react to this cooling inflation data and the fact that it is still hot, and how can we trade, how can we make money irregardless whether inflation is actually cooling down and in an environment where it is still hot and sticky, as we've discussed before. So again, this is part one of our weekly trading game plan for the week of August 15th through the 19th. We'll talk about our market analysis, our strategies for trading this week, and hopefully help you see opportunities to make money in your trading for this coming week. Thank you for joining us in the live stream. DS Greg, Captain Maddie, Born to Be Free, Spacula, glad to see you all today. Thank you again for joining us for the live stream. So we'll go ahead and get started. Somebody give me a thumbs up if the sound's okay, everything looks good. That would be helpful. Thank you. So again, we'll talk about that with the inflation data, the CPI data we got, the PPI data we got, how it seemed to indicate, at least in a short term, cooling down of inflation, but the fact that the overall year-to-year inflation is still hot, and reactions to that, and how, again, we can trade and make money. Good morning, Walter. Thank you for joining us for the live stream today. Glad to see you as well. Hope everyone's doing well. So first we'll look at where the markets ended up on Friday. Again, after this CPI data and PPI data on Wednesday and Thursday, we saw the markets really like that cooling off inflation data and reacted very positively. I'll talk a little bit about my theories on, why that occurred, what we're seeing. So. And again, quick disclaimer, none of this is financial advice. We're not financial advisors. This is all my opinions, thoughts, etc. But hopefully it will help you succeed in trading and make money in your trading career. So we can see, all the markets, they rallied, started out positive. There was a short reversal around 10:30. It's been typical. We see a 10:30 reversal lately, and then they rallied into the close with a strong market on close. So we can see now that the majority are running above their 50-day moving average, but still the majority is below their 200-day moving average. So we'll see exactly where the indices are sitting in respect to those moving averages. And then, what do we expect in those regards? Good morning, Tanvir. Thank you for joining us for the live stream. Yep, we're going to talk about that Chinese delisting and our theories on how to play that in our strategy section. So everybody stick around for the strategy section towards the end of this video. Again, we'll talk about, our strategies for trading these trends, these various events that are occurring. So we see, almost everything was green. J&J had there's some issues with Zantac. We'll talk about our strategy with biotech as well, both today and tomorrow. Look at some of the news. Says, okay, Affirm, yeah, credit stuff. Brazil. I see Soros loading up on big tech. And then the close of the S&P above this 4231 mark. And again, we'll look at where the indices are sitting right now. We see oil had run up and is declining again. It dipped close to 91 and then bounced a little bit up. Natural gas has been a little bit crazy. You see it ran up near 9 again, still running along 9. Gold's had a nice rally, and we'll look at that in the futures as well. Welcome, Douglas PC. Glad to see you here in our live stream today. Glad to see you again. Hope you're doing well. So we see all the indices were very positive, big rally. We see most of the yields are under close to 3%. We still see there's quite a bit of an inversion. Again, those are indications of a recession when the bond yields are inverted. Whether the rest of the market wants to believe that or not. So let's quickly look at the indices. Look at the SPY. So we see the SPY broke out. And, last week we were talking where we're going to see a breakout or a fake out. Well, we got a nice breakout of that pivot point. We can see, it's above its near-term moving averages, but still below the longer-term moving average. So I want to zoom out to the weekly. So again, we could see it's broken out of the 50-day moving average, but it's still below the 200-day moving average. And we're going to see this in all of these indice charts. So pretty much, I believe they've all broken their 50. They're headed up to the 200-day. What I would expect, again, my opinion, not financial advice, but I would expect, a test, a rejection from that 200-day moving average. And then if we are going to go into a bull rally, again, into a bull market, we'll see a retest, a rejection. We'll see a couple tests of that moving average before it can break. So let's look at the other ones real quickly. And then again, I'll talk about some of my theories as to why we're seeing this. And you can see this was a pretty aggressive extended rally. So again, I would not be at all surprised to see some retracement, some profit taking again on such a rally. We look at the Qs, the NASDAQ, same thing. It's above its 50-day moving average. It's more distant from its 200-day, so it's got some more room to run before, again, it tests that 200-day moving average. Again, in all these cases, I would not be surprised to see, a rejection. It will have to test that a couple times before it breaks through that 200-day. And we can also see, as others have pointed out, that the 200-day moving average still has a negative slope, right? It's still turning down. So we need to see that average start to turn up some before we can really say we're back in a bull market. So let's look at the Dow real quick. Same thing. It's a little bit closer to its 200-day. So again, I would expect, a test, a rejection. The slope's still negative. So until the 200 days turn up, we can't really say we're in a bull rally or a bull market yet. So let's look at the IWM. The Russell, same thing. It's close to its 200-day, still has a negative slope. Looks like it's getting closer to an inflection point. Slope's decreasing. And again, it had a big rally on Friday. So again, very similar. Now, whether we continue into this rally early next week and then get that retracement, or if that happens on Monday and then we get a bounce back up, it's hard to say. So the VIX, and I know I promised Specula, I will talk about the VIX both today and tomorrow. We could see the VIX had dropped below 20. I'll check and see where it's sitting right now. I think it's sitting below 20 right now. Yep, 1953 right now. So it dropped below 20, tested 20, and it's continuing to retrace, revert to its mean, continuing to go down. Again, my expectation, since we don't really have any further catalysts after the CPI and PPI data, we don't have a strong catalyst, and you'll see we also got Michigan consumer sentiment data wasn't really very negative. So again, that was part of the rally on Friday. So unless we get some black swan event with Russia or China or something, I would expect it to continue to retrace back down to this previous low in the 18s. And again, if nothing further happens, it could go down to 60. So we'll talk tomorrow in more detail. My favorite ways to trade the VIX is the leveraged ETFs, which is UVXY long, SVXY short. And tomorrow we'll look at, you'll see we've got UVXY on our watch list now, and we added a couple days ago. So any Patreon members should have seen it get added to the watch list. that we update daily, and we'll talk in more detail about price levels and how to play this using UVXY, SVXY tomorrow again. So I'll briefly talk about groups and sectors here, and then in the strategy section, again, I want to talk about sector rotation. We talked about sector rotation last week as in my opinion, a good way to make money in these markets. We're seeing a lot of sector rotation. Again, I'll talk about why do I think we're seeing this. Again, in the strategy section, I have some more data about that, but we'll look at it in FinBiz real quickly. We'll look at the Groups tab. Again, we have other videos about how to use this Groups tab in FinBiz. You can find our affiliate link to FinBiz in the notes and in the comments below, etc. So we see Friday, almost everything was green. The least green was energy. And again, this is part of the sector rotation that I believe we're continuing to see is energy will go very positive, and then even within a given day will turn negative. And again, I think people are taking profits, but if we look at the weekly, energy was the top performer. So again, I think we're seeing this sector rotation, profit taking out of energy when it gets high and rotating into other sectors. You see real estate, basic materials started making a run, and those were the strongest for the week as well. Now, for the month, we're seeing technology, some of the worst performers previously. Again, I think part of the sector rotation is part of the underperformers previously, technology, consumer cyclical, etc., are rotated to the top of the monthly group. So, and Amazon, yeah, we can look at Amazon if you want again tomorrow. I haven't looked at Amazon in a while. So if I look in detail about some of the industries, again, we see real estate, basic materials, some of the laggards, again, leisure, etc. And again, I think a lot of this was rallying on the inflation data. Part of the reaction, again, my opinion, is I think people made the assumption, inflation's not as bad as we thought. People are going to go out and they're going to spend money on, leisure and gambling and stuff like that again. The inflation numbers reduced a little bit. It was a little bit below expectations, as we'll see, but it's still 8.5% year on year. So I think that reaction was a little overdone. Also, we'll talk about the Inflation Reduction Act that came out or passed yesterday, and obviously that prompted a boost in solar, etc. So the worst performers right now, you can see just a few oil and gas, some grocery stores. It was very minimal. Uranium I've been watching because it's lagging on the energy area. And, we swung uranium profitably recently, and I'd like to be able to do that again. So again, energy, basic materials, real estate, etc. So again, we'll look at we'll talk about some other ways to see sector rotation again when we get to our strategy section as well. Okay, so let's talk about our economic data from last week. Again, the hot topic was the CPI data and the PPI data on Wednesday and Thursday. Just a reminder, as that data comes out, I usually grab it from the economic calendar on investing.com. And I post it in this Surf the Markets channel in our Discord. So you can get access to this data. Again, as soon as I can post it, I will snapshot it as well as post the textual data in the Surf the Markets channel in our Discord. You can find an invite to our Discord in the description box below. Also in the links section on our homepage, beachbumtrading.com, bum without the U. Also on the About page of our YouTube channel, etc. Our Discord is free to join. Um, Also in the notes here, here's our Google Sheet or Google document notes, and these are publicly accessible in a folder, Google Drive's folder, and you can find the link to that folder in the description box below. As well as notes from our previous game plans, etc. And that gives you all these various links to the Investing.com economic calendar, etc. So a lot of ways to get this data. Also, the Investing.com link is in the trading tools under links on our homepage, as well as all these other tools that we're showing that we use for our market analysis, our trading, etc. There's FinViz, ETF database, etc. Sector spiders, and we'll talk about that in a little bit as well. Yeah, that would be great, Tanavir. We do mostly swing trades. I'm going to talk probably tomorrow about maybe trying to do some more shorter term trades because of the way the sector rotation's going. So again, I'll probably talk about that. But we're primarily swing traders. That's our bread and butter. It fits our personality. And again, I always recommend, people find the type of trading and the time frame that best fits your personality that you can be consistently profitable with and go with that. That just works better. And again, I'm not as nimble as some of you guys that are great day traders, etc., scalpers. So there wasn't much Monday, Tuesday, and then we got the CPI data. You see mortgage rates, etc. But the key was that the core CPI was below expectations, both for the month of July and year on year for July. But you can see it's still hot. So we talked about, inflation's cooling down a little bit in terms of a month-to-month standpoint, but it's still 8.5% a year, which is, again, below expectations. So the markets rallied nicely. And we see, okay, stock market futures surge. And this is a link to this article. So in our notes, you can go read that article. And treasury yields plummeted. Shows inflation easing. So again, in my opinion, that was an overreaction. The Fed still has to raise interest rates, whether they raise it by 0.5 or 0.75 in the September meeting. They're still raising. So to have the bond yields below 3% when their target is 2.5 to 3.5% seemed like an overreaction, but obviously tech really liked that. Yes, well, thank you, Specula. We try. So yes, our goal is to help you make money in any kind of market: bear market, bull market, range bound market, whatever. So that's our goal, is to help you succeed and be able to make money in any market. So then we saw also, this didn't get a lot of attention, but crude oil inventories actually went way up more than expected, way up than previous. So it was strange that oil rallied up into the 90s. Again, I think that was more of a trading effect than a supply demand. But again, part of the lower inflation is, I think people assumed, people are going to go out more, they're going to spend more, they're going to travel more, and therefore oil and energy should go up. So that's a little bit contrary to the supply numbers that we're seeing. So again, another reason that a retracement would not be unexpected. Same way with gasoline, inventories were way down. And Thursday, we got jobless claims and then PPI data. You could see continuing was higher than expected. So that says people are not finding jobs. The job market is tightening a bit. And initial claims was just a little below expectations, but higher than previous. So again, we can expect unemployment to be creeping up a bit, the job market to be tightening. We saw JOLTS data, the number of jobs open had decreased, etc. So we expect increasing unemployment, job market tightening, etc. And we're in a recession. and we're headed into a recession. Even though they say, okay, is in a real recession? Well, technically, it's a recession. So we want to plan accordingly, position and recession-proof and inflation-proof our portfolios appropriately. And we've been talking about this since as early as May, possibly before. So I went back and I'm working on cutting out all of our strategies for inflation and recession proofing your portfolio into a series of separate videos, so that they're easier to access and people can benefit from those. So those should start coming out very soon. And if you've been around for a while, you may have heard some of that, but hopefully putting it together in a series will help you and other traders be able to inflation proof and recession proof your portfolio. So, and then Friday we got Michigan sentiment, which is preliminary data. We also got this import export data, which again says that the inflation impacts from imports is also decreasing. So that's another piece of data people didn't pay as much attention to, but that is an inflationary factor. If the prices of things we're importing is going up, obviously that goes through the supply chain and causes inflation eventually to the consumer. So, and then we got the Michigan data, and it was better than expected. It's still not very good. So again, the market cheered, people cheered that it was better than expected, but the sentiment is still pretty bad. It's just not as bad as it was. The past two readings ago was the worst in forever, and it's improved from there. So that's a positive that, okay, things may be cooling. You see their expectations, consumer expectations for inflation went down a little bit, but it's still 5%. So it's still way above the Fed's 2% target. All this stuff says whether it's way above the Fed's 2% target. Therefore, they're going to have to keep raising interest rates, keep tightening. They also need to, reduce their balance sheet. So again, I don't expect a major change in direction. Even again, if they go 0.5 instead of 0.75, they're still raising interest rates. So if I just very quickly go to next week's economic calendar, again, you can flip in investing.com. You can see last week's with the actual data. And then I need to filter this. So you can see if you want to see other countries, I guess my filters got cleared. So I'm trying to figure out how to clear all the other countries again. Yeah, okay, it's just being annoying. So I'm going to skip this for now. I don't want to chew up your time. I don't know why my filters got cleared on this machine. This is a new streaming machine. Hopefully the performance is a little better for everybody. And frankly, there really wasn't anything very exciting in terms of economic data for this week. And again, you can view that in investing.com. I didn't see anything real notable. There's some Fed people talking, so you might hear if they're, starting to talk about backing down a little bit, or not. So upcoming events, please remember Friday is the August options expiration date. So for the monthly options, again, expire on Friday. So we might see some additional volatility in that direction. Again, there is no August FOMC meeting. The next FOMC meeting is in September. So we're not going to get a rate hike in August. They do have this Jackson Hole meeting where they do speeches and talk about things. So we might get some sentiment, if they're talking about backing down again, I don't really believe they're going to. I think they'll either do 50 basis points or 75 basis points, and I don't think it makes a big difference. They're also accelerating the quantitative tightening, so we should see more pressure on bond prices in the near future as they tighten further. Here's the Benzinga earnings calendar for next week. And again, just a quick reminder, I also post the link to that in the Surf the Markets channel in our Discord, so you can access it there as well as from our notes. We'll see that the earnings is lightening up a little bit. We're through the bulk of the earnings for this week, but it still does matter. We can see some of I think that's interesting. It'll be interesting to hear if recruiting firms are starting to do better. That might be a factor of unemployment. Weber kind of already pre-announced that they're expecting bad numbers. Some others, Walmart already, pre-announced that their inventory was messed up. So again, don't expect real positive out of that. Lowe's might be a little interesting. Then we got some retail of different tiers, and Target's kind of your mid tier. TJ Maxx is kind of your lower tier. Then you got Kohl's and Ross. I think they're about mid tier as well. So it'll be interesting to see if the consumers are just not spending on clothes, apparel, retail, or if they're trading down. So we might get some indication of our hypothesis that because of inflation and a recession, that people may be trading down. Specula asks, I know you post it every week, but what if I can get in trouble for posting elsewhere? I don't believe so. I don't believe so. I don't see an issue with it. People post it in their Twitters, etc. So. You can also get more detail of the earnings calendar on investing.com. Again, another tab on that calendar we were looking at was earnings. So again, you can see all the companies on that tab in investing.com. And then we'll also see we have a very near-term view on in the markets tab at Webull. So we'll jump over there real quickly. Looks like I need to change my Webull banner because Webull's now offering 12 free stocks if you open an account. I know my banner will say 6 because that was their previous offer, and you can now see they've doubled their offer and you can get up to 12 free stocks. Again, Webull's our favorite trading platform. It's what we use for the vast majority of our actual trading. And we really like Webull, particularly the 4 a.m. to 8 p.m. Trading. So, and right now you can get 2 free stocks up to $300 each just for opening an account. And then if you deposit any amount, even a cent or a dollar, you get between 4 and 10 more stocks, each valued up to $3,000. So again, if you're not already using Webull, great opportunity to get 12 free stocks. Again, that's the highest offer I've ever seen them make, and we really like Webull. Yeah, that's inflation. That's a good one, Douglas. Yep. Yeah. Now free stocks are inflated. So this is the markets tab on the online browser version of Webull. We could see from the histogram, we had a lot more advancers and decliners on Friday. Again, big rally on Friday with all the cooling inflation data, a little bit better consumer sentiment, etc. And we saw towards the end of the day, the NASDAQ beat out the NYSE in terms of inflows, but we can see there was a decrease through the course of the day. So a big inflow initially, first in the Dow, in the NYSE, and then the NASDAQ. Then the NASDAQ took over later, but the big inflow was very initially, and that was even before the consumer sentiment data. And as I mentioned, you can get at the earnings calendar here. This will be the very near term, who's reporting in the near term, whether it's before market, after market. It looks like we got some energy companies, so that might be interesting. So I'm going to look at the best performing industries for the week, because again, Friday we pretty much know everything was pretty much green. So yeah, energy, still almost everything was green for the week. Here's integrated hardware software. So hardware software was not as positive. Auto parts not as positive. Education. So those a little bit of laggards there. Yeah, the DS Greg, yeah, we really like. That's why we originally got Weeble too, to take advantage of the 4 a.m. trading. Um, and usually, I'm usually up for the 4 a.m. Weeble Open. I find there are some opportunities sometimes, particularly some of the leveraged ETFs rebalance, and you get some gap ups, gap downs. Like to be able to take advantage of. Sometimes you get irrational reactions. So I like to be able to take advantage of those kinds of irrational reactions. So if you are around at 4 a.m., wave, say hello in the Discord, or ping me in social media. Probably Discord's probably the best. I'm usually up and around, checking the markets around 4 a.m. So look at the ETFs. We see up on the Dow. Tomorrow, somebody mentioned in the Discord as well, talking about small caps. I think they might have mentioned TZA, not TNA, but those are the leveraged ETFs on the small caps. And tomorrow, I want to look at those as well as the various leveraged ETFs to play the indices like SQQQ, TQQQ, and the similar ones on the S&P, etc. So. I don't see those guys showing up right now. There's UPRO. That's one on S&P. Okay, there's TQQ. That's the bull leveraged on the NASDAQ. You see that's the number one top here. So yeah, they're betting big on up on the Russell, etc. And you don't see either UVXY or SVXY in the VIX. So, not a strong bet on direction on the VIX here. And Douglas mentioned Labu. Yes, tomorrow we're going to talk about the leveraged ETFs on biotech and what we've been doing with that, what our plan is to trade biotech using LABD, which is the short on biotech. LABU is the long on biotech. And yes, we took some trades in there, and we're looking to take more. And again, come back tomorrow. We'll talk about our specific strategy, what we did, and how we're planning to play that going forward. Yeah, and I know Walter's. I'm glad that you're enjoying that and making money, is what it appears. So we're glad to hear that. So very quickly, industries pretty much all green. Healthcare had a couple negatives. Consumer cyclical, a couple. Well, we know that Xantech thing was an issue. So not a lot of negative. Commodities, we saw the rally in gold. We'll look at the futures in a minute. Look at all the commodities. So soft coffee, pretty positive. Again, we'll see the bounce. Silver got a bounce. So let's jump over to, let's see, did I miss anything? Some others. This will be, okay, so TMF, yeah, went up. That's leveraged on the 20-year bull on the 20-year treasury. Yeah, so all the treasuries up, betting up on price. And Forex, we'll look at that in the futures as well. Okay, so let's look at the futures real quick. Then we'll talk strategies and answer questions. So again, we've got a whole video on how to use this futures tab effectively in FinViz. Again, I use this quite a bit, even during the day. See which direction everything's going. We see pretty much all the indices broke out. They're a little extended. We saw that in the actual indice ETFs, the Russell, again, all of them are up, broke out from their previous high. They're, again, all a little bit extended. Guess I'm going to have to block those ads on FinViz here. See the retracement on the VIX. You see it'll make some minor pops, but effectively it's declining. So, and again, tomorrow I want to talk in detail about the UVXY and the VIX and our strategy for we're watching to go long UVXY, but again, I want to talk in more detail tomorrow about my strategy for how to play that. So we see oil, it made a bottom, popped back up a little bit. Looks like it's rolling over. So they all look like they're rolling over. So hopefully oil will go back down below 90, continue to retrace. I think it was Kramer, and he had somebody on that's kind of a technical person, kind of called this bounce off 85, and that's what we got. So that was interesting. And we see this run up back in natural gas, testing 9. The one thing we do see is it's making lower highs. So when it makes these crazy runs, so far it's making lower highs and then it'll retrace. Now, again, tomorrow I'll talk more about a strategy, a shorter term strategy using the leveraged ETFs we use on natural gas, which is primarily BOIL is up, BOIL, cold, KOLD is down. Yeah, we'll look at orange juice. I've never found a way to short orange juice, Douglas. Yep. Um, but again, we'll talk tomorrow about strategies for swinging natural gas because it has been very volatile, and using that boil and cold ETFs. So we see the run up in gold, flattened out a little bit. Same way with silver, but silver had a nice pop on Friday. Again, they seem to be trending back up. Copper recovered. All these guys, they bottomed and recovered, bounced nicely. So kind of wait for them to cycle back up. I don't know of a way to short palladium. I don't think, but we'll look at that again tomorrow because it's these really high ones are ones I like to look at for opportunities to short. When they bottom, look for opportunities to long. So there's orange juice. Yeah, it's not as high as it was, but it ran up again. But I don't know a way to short that one. And yeah, tomorrow again, we'll look at our ETFs tomorrow. But there's various ETFs that you can, if you think it's time to sell cattle, there's an ETF. I think it's long only. I don't think I have a way to short cattle. So we see all the commodities have bounced, and then we see all the treasuries kind of rolled over, and we'll get these small bounces a little bit. We might see that again if we get a profit taking. It'll turn into kind of a risk off move. We might see the bond prices bounce up a little because of that risk off move. And then we saw a decline in the dollar. So again, that's another reason we saw the dollar-denominated commodities kind of get a boost, as they had been under pressure due to the strong dollar. So as the dollar declined a little bit, that relieved some of that pressure, allowed some of the commodities like gold, silver, oil, etc., to bounce a little bit. We'll talk about how we're looking to play this dollar strength against the euro, particularly a little more tomorrow. We were looking for that parity test again. We didn't quite get it yet. We'll see if there's a opportunity there. So any other questions? Yeah, and Douglas is mentioning you can buy a short position, not an inverse ETF. The reason we use the inverse ETFs primarily is because most of our accounts are retirement accounts where we can't short individual stocks or ETFs. So now, again, one of the benefits of leveraged ETFs and the inverses is we also have no borrow fees, etc. But again, mostly I don't know of any retirement accounts where you can short individual stocks, have a naked short. Um, I do have a cash account, but again, I have not ever actually shorted an individual stock yet. Get a drink. And then we'll talk about strategies. Okay. So a couple things. We talked earlier about some of the things in the Inflation Reduction Act that did pass yesterday, passed the House yesterday. And one of the other things I was talking about in the Discord as well with Walter about the Lab U trades is one of the things in the Inflation Reduction Act that I think is a reason to short biotechs is uh, part of that is Medicare is going to be able to negotiate lower drug prices on pharmaceuticals. I know it rolls out over time, and their first targets like insulin. Can you guys hear me? Mike check. Can you hear me? Can somebody in the give me a thumb? Okay, great. Thank you. So again, I think, in my humble opinion, that negotiating prices and limiting the profit that pharmaceutical companies can make on their drugs going forward is potentially going to further stifle investment in biotech. I think also the tightening financial environment, recession, higher interest rates, etc., are other reasons why risk capital is going to go less into um, biotech. So, um, and we talked about M&A some. I'll talk a little bit more about M&A as well. No, I did see that they may be able to get. Douglas says there was a Bloomberg news that drug companies may be able to get sued. Not well, they have been sued and paid out a lot on things like Oxy and that I don't know if they get sued on Zantac, etc. So, but I did not hear that. But if that increases their risk, again, I think that's going to further stifle biotech. So again, I'll talk tomorrow about how we're looking to play that Lab D trade. Also, and I can talk about this probably not today, probably more tomorrow, about how I think the ETFs and the sector rotations, what we saw in tech is, when they decided, okay, we're going to buy tech, risk on, all tech went up together. So semiconductors, biotechs, they all went up together. There wasn't really a discrimination between there's some negative factors for biotechs. There's some negative guidance on pretty much all the semiconductors came out and said, hey, we've got a glut, or we're going to have to lower guidance. So you would have expected semiconductors to really go down. But I think the pouring of money into tech in general pushed both semiconductors and biotech up with it. Same thing happens with energy. When they pull energy down, they pull down oil, gas, natural gas, uranium, all down together. So I think the ETFs and this just mass sector rotation is not discriminating, and we'll see if we see more discrimination going forward. obviously this thing also had credits for EVs, clean energy, climate control, etc. So you'll probably see some movement. Oh, we've already seen movement because everyone saw this act coming. It was just a matter of whether it was going to pass. So, um, and we'll talk about this more and the effects going forward as we see it. I want to talk a little bit about the Chinese. I think Tanavir, someone mentioned the news out on Friday that a number of big companies, Chinese companies, are voluntarily delisting from the U.S. stock exchange. Um, I I believe there's something behind this. Again, this is a hypothesis, my opinion, not financial advice, but I think this is the start of something. And as you know, for probably about a year, we've stayed out of any individual Chinese companies. I was surprised I didn't see a big pop in Yang, which is the short on China tech. And tomorrow we'll also look at some of the other ETFs to short China. Because again, I think this is the start of something, and we didn't really see a strong reaction to it. So I think there might be some opportunity there as well. So then again, let's talked a little bit about the sector rotation. That we're continuing to see the sector rotation, and now we're actually seeing it intraday. So what I saw, I think it was Thursday or Friday, it tends to just be a reversal. So they'll run energy up part of the day, they'll reverse and they'll run energy down. And you're seeing swings in the 1, 2, 3, 5%. Nat gas will swing up to 5%. And now it's happening. It used to be every couple days, and now it's happening within the same day. So if we see it down initially, you want to watch for this reversal and see the rotation and where's the money going. So, and thank you very much, Spacula, for that super chat. We greatly appreciate it. That really helps, and we appreciate all of your support. Again, Spacula, thank you very much. If there's anything we can do to help you succeed in your trading career, just let us know. We greatly appreciate all the support. So again, this is going to be one of our major strategies in the near term, is looking for these sector rotations. Are they running tech? And when they start profit taking out of tech, where are they going to pour it into? I would not be surprised to see a rotation between like tech and energy. If it's a risk on, they're going to go to tech. If it's risk off, they're going to go to energy, basic materials. Again, barring any news. So we have a number of ways to watch these sectors. Last week we talked about the sector tracking tool, and I did a video in more detail about how to use the sector tracking tool from the Sector Spider site, which you can see here. Again, it's released on our channel. You can get the link here. I just went through all the features in a little bit more detail, so how you can use that. Another site I found from another channel, and I put this link on our homepage as well. It's called Trading Economics. So it's under Tools. So there under Tools, the link's on our homepage. And also, you can get to it in the notes, and it has a lot of features as well. So you can see markets indicators, etc. And I found that very interesting and useful. You see all the global markets. And maybe I'll do a more detailed video on that. Also commodities. So it has a nice tab where you can see all the commodities, etc. So somewhere I saw sectors was what I was looking at. So I'll have to dig into that in more detail. Maybe I'll do another video. But I saw a nice real-time sector tracker in there. So here's the indices, global indices, etc. So I'll dig that back up as well. Probably maybe do another video on it. But Again, I found that useful as another way to look at sector rotation. Again, within the commodities, it's particularly it has a little more detail on splitting up the commodities like oil versus uranium, etc. So, okay, we're running pretty long. I'll try to answer questions. We've talked about this before, finding cheap stocks. Maybe I'll talk about it more tomorrow. So I want to answer Specula's question, then any questions from the chat. Specula asked in our Discord about crypto. Am I still staying away from crypto now? Essentially, I've been watching it, and I think what I've decided right now is to use it possibly as just a short-term trading mechanism. And I would be looking at Ethereum. Probably at the $1,000 level. It may not come down there again. I don't want to hold crypto, and I can go into more detail about my reasoning, etc., as to the risks I see in that. And I think we talked about a couple weeks ago. We've seen this movie before. We see how it ended before. So again, I'm not going to hold crypto probably. But I wouldn't mind. You can see the possible profits. What Ethereum went from 1,000 to 1,800, almost 2,000. So that's looks like a not a bad short-term trading vehicle. Again, you need to be nimble. It is very volatile. I don't know if I'm that nimble. But I was considering if I see an opportunity, particularly in like Ethereum, maybe Bitcoin. There are some ETFs you can long and short Bitcoin. I can use those. Somebody pointed out that there is some risk in that the ETFs, the crypto trades all weekend, and the ETFs are not tracking it during the weekend. So you could get a major change in the ETF on Monday based on movement in Bitcoin over the weekend that there's nothing you can do about. So I thought that was a reasonable point. But again, as a way to trade, make money, shorter term, day trade, scalping, etc., I might consider that along with trying to swing some of the indices, etc., on a shorter term. And again, I'll probably talk about that in more detail tomorrow. So I hope that helps. Let me scroll up a little bit in the. Yes. Well, yeah. Specula pointed out the investigations going on with the exchanges and essentially the bankruptcies, and they're essentially you can't get your coins, you can't get your funds. There's too many risks in that area to hold on to it right now. In my humble opinion, trading vehicle is fine. Until things shake out and stabilize and we see where it's going. The other reason, as you know, I mentioned the reason I was interested in Ethereum was its use for NFTs, but obviously the hype in NFTs has also declined as well. So I see Walter says, talk about Chinese companies. Yep. Yes. Again, that's why we're staying away from any individual Chinese companies. And again, tomorrow we'll talk about various ETFs that you can use to swing Chinese companies, either long or short. So if anybody else has any further questions in the chat, I will address them quickly. Otherwise, we'll try to wrap up. If you have any further questions, you please put them in the comments below this video in our Discord. Thank you for those that responded to my request for questions prior to this video, Specula, etc. I will continue. I'll look back over your questions and see what others I can answer tomorrow. But again, please join us in our Discord. It's free to join. Ask any questions. I'll either address them at this time, or again, I might address them in our game plans. I might do separate. I might do separate videos if that's the best way to address them. So DS Greg is asking, what's the live stream at the high Patreon level? Right now, just to answer that is right now, these are the weekly trading game plans are the only live streams we're doing right now. If there are particular requests people have for a Q&A session, etc., or if you'd like on a particular topic, please feel free to ask. Right now, that's the only ones we have scheduled right now. Again, we're looking to add value to our various levels of our Patreons, uh, particularly focused on what are people's interests and needs. How can we help you succeed in your trading career? So yes, we have various ways we could talk about other ways to interact, be it Zoom conferences, live streams like this, etc. So. Okay. Again, if you have any further questions, put them in the comments below in our Discord. We also have a Facebook group. Feel free to post your questions, comments, etc. there. Also, you can always hit us up on any of our social media platforms. And for anyone watching this who's not already subscribed, we hope you will choose to subscribe. We hope you like this video. Please hit the notify button so you'll be notified of further videos and live streams as we publish them. And again, we hope you'll come back tomorrow. We'll talk about specific stocks, updates to our watch list and our bullpen and our shopping list for next week. And again, individual strategies. Again, if you have questions about individual stocks, etc., please post them in the comments or Discord, etc. So thank you very much, and you all have a great rest of your day.